Good morning, guys. Welcome to this Friday, May 1st. So we're starting next trading month. May, can you believe it's almost freaking June, and then we got 6 months to Christmas. That's going to start reminding you, this getting that time of year, going to have to start reminding you about how Christmas is soon coming up here. Anyway, I'm looking at the little pop we had yesterday. That's nothing but spectacular, and we had a lot of stuff happening. We had these tech earnings come out on Wednesday and the Fed number. Yesterday we didn't have anything really obviously come out in terms of news, but this market took off, and then it was a little bit hesitating in the beginning, a little bit of weakness, a little sloppy in the morning, and then after like 10:30, the whole thing started taking off. 10 o'clock on the ES here, you can see that nice move out of the middle, starting from from the 71.95, 72 area, and did not look back. Has been holding the gains all throughout the day, and we'll see here if this is going to be if this was just window dressing to wrap up April, or if it's going to be a continuation coming into May here. Right now in my market, I mean, new highs begets new highs, and there has been this very stubborn grind to the upside going on, and we'll take it every time, every day, right? News this morning, 9:45 we get PMI manufacturing, and 10 o'clock we get ISM manufacturing. So 9:45 and 10 we have news, nothing at 8:30. And I'm just starting this on the long side of the market. Watching it. If this starts trading below this area, the 72.10s and the 71.95, these two support areas, I will take off the long bias and go back range bound. And at that point, this whole thing was just a probe to the upside. And window dressing to wrap up April, I guess. But right now, that's what I'm looking at. There is more. We're in the middle of earnings, so just because a bunch of big earnings come out on Wednesday doesn't mean that this bunch of earnings keeps coming out. So just keep watching it. And so far, the earnings has been pretty good. It's the concerns and the weakness you've seen in those stock prices has been more related to, well, they're spending too much. They're spending too much on AI. Well, I'm okay. So, usually that's a good sign that they don't they're concerned about the return on investment on that money spent. There is some crazy spending going on for sure. Now so I'm starting this on the long side of the market. I was just going to say the only caveat I have out there is that chances are we're going to see some action over the weekend. I would expect. I mean, right now either they're going to just sit on that. I'm talking about the Iranian situation. So I don't think that's going to happen until after the close today or into Saturday, if they're going to do something, and there may be some action going on there. So Monday morning could be a little bit iffy if that happens, but it's and if it doesn't, I don't think it's going to be just more of the same. But that's a caveat, a little curveball there, which potentially could kick in, and that would probably create the knee-jerk reaction to the upside, or pop oil to the upside, or sorry, the knee-jerk reaction to the downside on the stock market, and oil pop into the upside. So that's something to look for. Well, you'll have plenty of time. I mean, you're not going to get it until over the weekend, and then Monday's trading, Sunday night, Monday's trading is where we had to kind of worry about it. But today, I think the market just going to stay range bound, bias to the upside, watching it continue for continuation. Looking at these lower areas, the 72.10s and the 71.95s. If they back off more than that, you'll take off the long bias and go back range bound. So initially, looking to buy against the 72.45, 72.35s, 72.20s, down to the 72.10s. So these are the four areas I'm looking to buy against. That would be pretty expected, actually, if after the run up here that they retrace these single prints here and try to shake out weak long positions. If they back off more than that, they will take off the long bias and go back range bound. So that's how we get started. But man, isn't it great to look at new highs? That's awesome. It's so much beats watching the market tank and grind and try to figure out where to go, And this rally, I had to say, this rally came out of nowhere. I mean, it wasn't necessarily a good setup. Unless you sat in stocks already, you would have been just flat out run over. So I added something to my chart here. I'm just messing with it. So I put in the true range stop. Down here, there's some tracking stop. It's going to give maybe a second opportunity for for pullbacks, during the day. If they get pullbacks to down, two standard deviations on that stops. In other words, it's just a volatility calculation, and the stop tracks two standard deviation below that. So if the price retraces more than two standard deviations from the average, then you basically run into that stop. And that's just an indication potentially if you want to buy a pullback that you want to buy it closer to that area, but not necessarily if it starts trading through it. So that's what that is. I'm going to put it on these two charts and see if it's useful. I mean, it is useful. It just I don't want the chart to get too busy. Maybe get too busy, it's just hard to see everything. But right now, it probably works okay. On the Nasdaq, same story there. We got a pretty good move to the upside. Did not quite take out. Well, they did take out the highs. They're not quite as profoundly as the ES did, and they've been pretty much in the same area as the overnight. In the day session, did not take out the overnight. They did in this overnight extended though, so they still extended a little bit to the upside. And Nasdaq is also in a pretty good spot to move higher. So stay on the long side on that guy as well. Look to buy weakness against 27 540s, 500s, 440s, 350s, down to the 280s. I would say below, you see this nice volume edge here at the 440s. If that comes out, start thinking about pulling back from to more range bound instead. I would probably do it. Just take off the long bias if they trade below that edge 440s. It can happen pretty quick if it's going to retrace this, but it's I wouldn't be surprised if we get a little bit of retracement on that one. If it's going to stay down or not, who knows? It's just anyone's guess. When it moves like this, when you have new highs like this, you just never know when they're going to run out of gas. They're finding a spot to cut off the buying right now. We're in stage one, move out of the middle to the upside on both the ES and Nasdaq. So we're looking for a spot to cut off the buying. We'll see if it's going to be the highs here at the 660, 670 right now, 27, 670s or not. But initially looking to buy against 540s, 500s down to the 440s 440s for rotations up. Below that edge, volume edge, we take off the long bias, go back range bound. Still looking to buy against support, 350s, 280s, probably all the way down here to the 180s. 180s takes us all the way down here to this area. It could be all the way down here to the 27,000s actually, but I would say that if they start taking out this area and start crossing at least the midpoint of this distribution, you have a mode here at the 27,200s. The 27,200s would be halfway below this area, the 280. So if they start crossing down below that mode, I would start worrying about the short side. It's kind of backing off a little bit too much at that point for this to be just a normal early weakness kind of dynamic. So that's how we get started, and we'll take it from there. So looking to buy a weakness on the ES and the Nasdaq. Let's see how far they can take it. All right. Oh, what happened there? Look at that thing. Okay, something happened. Hope you're not in a short position. Man, right in front of us. Anyway, as this is developing, we'll listen to the news and see what that was all about. Could that be some earnings report come out? You'll find out. And the bond market also popping to the upside, so they're probably not an earnings report. Probably not some kind of a news report of some sort. The bond market wouldn't be moving on an earnings report like that. So looking at looking for range bound trading on the bonds as well. Same story there. Look to sell strength up to the. At this point, they've been drifting lower, so we'll see if they can turn that around or something. But it's so far. Right now it looks like we may have it. Either taking out the high of the previous day. They haven't done that for a while now. They've been just grinding this lower. So maybe we have a little retracement going on here. And so looking to buy weakness, sell strength on the bonds. Right now, I would look to buy against the 112.30s, 12.20s down to the 12, 15, 16s for rotations up. I'm going to sell strength. I was going to say the 1306s, but right now it's going to be 13, 14s, the 18 to 20s up to the 24, 26s here. So those are the areas. So looking at 24, 26 up here. If they start taking that out, we definitely have something going on. But I would look to sell against those areas up as they approach them, and looking to buy against the lower areas and pretty much trade it as a range band market. Anytime it pops like this, kind of had to be look around for a bit and see if there's any kind of continuation, or if this was just a one-off event of some sort. Yeah, Christmas. Yes, Jeff, Christmas. I had to start thinking about that. It's happening in about, what, 8 months, maybe 9 months, 7 months, maybe 7 months. Had to be prepared. Start thinking about it. Anyway, that's keeping you on your toes. So the bond market, just range bound trading, looking to, as I say, sell strength up to 13, 12 to 14s, 20s up to the 24s. Looking to buy weakness, 28s to 30s, 20s, 14s to 16s here for rotations back. I'll see how that goes. So that's pretty much what it is, and nothing going on the crypto side of things. We have what's going on there. You can see gold was way down, and it went down from 46.40 all the way down to 45. 70, $100 to the downside on gold. Big move to the downside. Silver also down, retracing pretty hard right now. And oil heading back down again to 102. So oil trading lower. That's interesting. Who knows? Maybe they had some kind of a ceasefire talk or continuation of a ceasefire or something. Who knows? So things are moving a bit. So you see on the Bitcoin and Ethereum, they're popping a little bit. Metals are moving, oil is moving. So something came out. And then we'll see if they get some. That was a pretty interesting pop right in front of us here on the ES and the NASDAQ. So back to those two, ES and the NASDAQ. And that was a nice 55 to 70, 20-point bar right there, popped right up here. And then let's see where they're going to go from here. Now, reaction, balance bar. Let's see what side of the bar they're going to go on here. Alrighty, guys, that's pretty much it. So starting from the long side, let's see if you get continuation. Try to get long against early weakness. But if that early weakness goes too far, then we'll take off the long bias and go back range bound. So, and if you buy against early weakness, I mean, there's no point of stepping in front of it. You can wait for it to stall and for a retest or something to that effect before you aggressively try to do something. That usually helps a little bit. It's stepping in front of it on the way down in the support area. Just with this kind of volatility we're seeing, it's a little bit bold, I would say, because you can easily get run over. All right, guys, we leave it there and see you back at 11:30 for the next update. So good trading, guys. I'll see you back at 11:30. And remember, it's Friday, so don't do anything super crazy. All right, guys, later.